Hello traders, Sid here with another video, and in this video I'm going over some of the stocks that I picked to put a trade on during this week. Now I picked all these stocks based on some fundamental and some technical analysis. Also, in addition to that, I picked up a range of their price move based on all the options activity that is happening within those names. Okay, and I got all the options data from the quantdata.us. That's a website where you can get all the options activity, and you can basically sort them based on open interest and volume to pick a range, because most of the time it gives you some range, and basically that stocks moves make its moves based on that range, and its probability is good. It's more than 75 to 80%, so I'm comfortable taking trade based on that. But obviously tracking market activity day to day is very important, because market can shift its direction based on certain news, some data, or any other factor, as market is volatile. And in this condition where market is range bound, you just have to take more precautions and need more validation before putting any trade. So with that said, let's get started. First, let's take a look at the SPY, what it's going to do. So SPY is range bound, and we reached to this supply we reached to this supply zone on last Friday, and we had aggressive sell off from that point. Now I'm watching this pie chart on 4-hour time scale, and I picked up a range based on some analysis of the option activity that it's going to make a move between 450 to 440. And you can see the day's range is within this week, so that's very valid. And 10-point move for the SPY is not a big deal. But what my plan is, and let me give you some kind of like a disclaimer, because if you want to take a trade, do some your own research and take a trade based on your analysis. This is my analysis, this is what I'm looking at, and these are my basically research based on what I may take a trade or I may not. So I'm expecting SPY to move towards this demand zone, which lies right around here, somewhere between 435 to 425 level. And once we reach to that level, then probably we will make another leg high. But before that, I need some kind of like a confirmation. On Friday we broke down from this supply zone, and probably we will reach to this box that I drew. Okay, and that's a 440 level. So after that, let's see if it bounces or if it breaks down even lower. Now if it bounces back towards the high level around 460, then at the 460 level basically I will open a put position, because that's kind of like another supply zone where a lot of sellers are sitting in, and you can get some drop down, probably 2-3 points drop, and that would be enough to make a decent profit. So that's an analysis about SPY. Now let's move on to UPS. Okay, so UPS had their earnings last week. Okay, they published their earnings on 1st February, and based on that earning, it gapped up higher. Now what options activity says about UPS is that it's going to be within the range of 210 to 250. Now we are in the middle of that, and as you guys can see here, we have like a quite decent volume support towards 230 and probably around like 235. Now we reached to all-time high over here, and there can be two scenarios at the play. First, we will see the breakout towards the high around 250 range, and then we will pull back a little bit, or we will fill this gap up, and then we can jump back towards that desired target. Now you see here we have this beautiful volume support between 213 to 28 level. That means if first scenario fails to manifest, then the second scenario will be it will drop down to this demand zone, it will get bought up over here, and then we will make a new move higher. Okay, so just keep that in mind, but just at the same time just keep these two scenarios in mind. There is a bull case scenario and there is a bear case scenario. Anything can happen, just keep an eye on it. Now let's move on to ATVI. Now ATVI is not a typical stock where you want to take a trade and make and expect it to move towards the desired direction. Now ATVI, after Microsoft bought it, it jumped up higher towards 90, and then it got sold off pretty aggressively, or like very slowly, but the downtrend was pretty significant. Now it's trading clearly towards the sideways, and this type of price action you should avoid because it is not beneficial basically. Now this is like a last volume support that we have on ATVI or Activision. If we broke below 70 below 77, then there is no volume in between to stop it going from going towards like $72 or $70. Now that's what I'm watching. Let it break that $77 level, let it give us that confirmation, and probably from that point onward I will decide to open a trade or not. Most probably when stock moves sideways, usually it's better to go with vertical spreads or spread options. It can be anything, call, put, but it would be better to put spread options trade rather than buying naked call and put option. But that's just a speculation. I want to watch its price action, where it wants to go, and based on that I will take a decision. Now let's move on to Facebook. Facebook dropped massively after their earnings based on their future projections of their revenue growth and other things. Now what I want to see Facebook doing is like I want Facebook to move little bit higher towards the middle of this gap. Now this gap is very massive, and if it moves towards around like let's say 270, 250, because as you can see here the option activity indicates that it will move towards 240 and 250. Now if it makes that move, then it would be in a prime position to place a bearish trade on it, but that's just a speculation. I lost all the faith on Facebook. I was considering to include that in my portfolio, but now considering all the global sentiment related to the Facebook, their metaverse, and who knows whether that project going to be successful or not, so it's kind of like a taking a blind shot and hoping to hit the bullseye. I don't want to take that kind of risky trade, but I'm keeping an eye on it. My target will be 250. As you guys can see here, this is a massive kind of like a zone where buyers and sellers will be present. So I will watch this level, and hopefully if it makes that move towards 270, then I will buy a put options over there. But that's my plan. Trade according to whatever you feel comfortable with. Do your own research and place a trade based on that. Now let's move on to Amazon. I just made a video about Amazon, and to explain why I open the put trade with Amazon, but option activity clearly indicates that it has the range between $3,200 to $3,000. Now Why that's the case? Because the move that Amazon made after its earning, it was around like $500, and that was kind of like an exaggerated move based on market context. So that's why I feel like it's going to pull back a little bit towards 3,000 and 2,900. Now, based on that, I open a put position in my Webull account with five vertical spread put options, and quantity is 5, expiring on 18th of March, and my strikes are between 3205 to 3200. So let's see how it's going to play out. I think it will play out nicely based on the SPY pullback that we saw on Friday. So next one is Mastercard. Now, after earnings, Mastercard made this massive move, and there is not enough volume to support this move. Now, its current price at $382, it has a quite a range to come back towards its first support level, as in terms of volume at 372 to 369 level, and probably it will make that move, to be honest, because it has like a massive support over here. And the option activity clearly indicates that its range going to be 375 to 371. Now, based on the market condition, it can move towards that desired price target pretty quickly, or it will take some time. But I'm definitely interested in opening a put position over here, considering the volume profile and the overall price action. And you can see here probably it's in the formation of head and shoulder. This is a this is the left shoulder head, and it's probably going to come to the demand zone, make a bounce from there, and make the right shoulder. So that plays in that formation is in play. Just keep an eye on it. I will, if it drops below 380, I will open a put position towards 375. Visa, same thing. Similar to Mastercard, it has this huge gap to fill after earning, bounce back up higher, very similar to Mastercard. And we have this beautiful volume profile right around $217 to $212, so it can make its move towards there. Possible range is between 230 to 215 within this week, and if we consider that range, then probably it will make an attempt to fill this gap. And also we have this left shoulder head in formation, and right shoulder will follow after that if we complete this head and shoulder formation. Apple is a very interesting play because it's kind of like holding itself pretty nicely based on the market volatility, and right now we at the range of $172. Now the market is expected it to move towards 175 and towards 180. As soon as this goes to 180, I will open a put position over there, and because it's kind of like it will be like a textbook play, because we have this huge resistance level that we need to cross. Let me mark it in red, and we have this kind of like a support zone right over here. Let me mark it in green. So those are the two zones. Apple is like kind of like ping-ponging between those two levels, and I'm comfortable taking trades on Apple because it has it's very certain, and it's make a definitive move, and it follows the option activity pretty closely. So based on that, once it reaches to 182 level, I will open a put positions coming down towards this demand zone toward 175 173. That's it for the Apple. Now let's go to the Affirm. Now Affirm is very interesting play to watch here. All these next few of the plays are like earnings play. So earning is expected on 10th February. Okay, that means either two scenarios will be possible. First, they will report a bad earning and market will sell off, or they will put a bad earning, but at the same time, if they can project their future plans for upcoming quarters, then maybe that will push the stock a little bit higher. So if you want to play on this one, it could be a binary play. Either it can go it will have like a 50-50 probability of going in either direction. So I want to stay away from it. I am not going to take a risk of doing earnings play. Now what I want to see, if they project their earnings with good future plan, then it will bump up higher, quite high, up towards 100, towards this range of between 106 to 106 to $96 level, and that one is going to be very interesting level, because we have weak support over towards going higher, and we have massive support over here, but to reach to that level it will take some time. Considering market condition, it's not entirely possible, but anything can happen. Market is irrational. But I want to see the move towards $105 to $97 on that price range. I will open a put position, and so that it because that's kind of like a justified it. If the market is not supporting that kind of move pretty aggressively, then it's beyond market context and it will probably come down. Now a firm hit severely because of the Piton, because they provide financial they are financing their product, and Piton is kind of like in a dumpster fire in last few months. After their last earning, they stopped their production and they're in a bad position, so that might affect a firm as well. And if that reflects in their earning as well as the future projection, then it will tank even below this $49 level. So let's hope for the best, but just keep an eye on it. And let's move on to Google. Google is kind of like making this diamond formation, and if it has to make the diamond formation, then I would think that it will come down towards its previous level, that is 2700 level. If it makes that move, and if it completes the diamond formation, and if market condition goes bad, then probably Google will come back down towards 2300, 2500 to 2300 level. Now according to the market, the current range would be $2,700 to $3,000. So it's entirely possible that it will stay within that range, but it has this huge gap to fill, and it's very close to the gap fill level. And we have this declining volume support, we have least support within this range, so I'm expecting it to finish. It will complete this gap fill, and after that it will decide what to do. So let's see how it looks on Monday, Tuesday. Based on that, I will open a put position in regards to that Google will complete this gap fill. Next one is Microsoft. Now Microsoft is very interesting. It has this kind of like a not well defined, but kind of like a head and shoulder formation. This is a left shoulder head and this is a right shoulder, and it probably moved towards its 337 target, where it has a decent support. Now we are within that range. It has this low volume area, so anything can happen over here, but I'm expecting it to make that move towards 320. Daily weekly range is around $300 to $320. Microsoft follows S&P 500 very closely, so just keep an eye on that its move, and based on that you can open a position. Again, it's just my speculation. I might take a trade based on what I feel comfortable with. Other than that, just do your own research before placing your trade. Next one is Robolox. Robolox is very interesting, and since last Fed meeting is constantly selling off, and we are right at its IPO level. Now this earning is on 15 February, and it's everything based on their earning. Considering the Facebook drop so massively, I expect if Roblox put bad projection, then it will drop massively, even towards I don't know, for 50-40 levels. So just keep an eye on it. I'm not going to play this as of now. I will wait till it's earning, and then maybe I can based on that, considering opening a position. But this week's range will be 70 to 60. I'm expecting it to move a little bit higher before earning, similar to Facebook, but anything can possible. It's I'm not liking this price action. I'm not liking this chart, so probably I will stay away from this unless it shows some kind of a promise in the price action supported by volume. Now let's go on to the Roku. Roku got destroyed after the Fed meeting, after making the recent high of $488, and it dropped quite significantly, to be honest. And they also have their earnings on 17 February, and everything depends on their earnings. So far, Roku has a tendency to move up. It's quite evident over here, little bit over here, not so much over here, but it's kind of possible that it can make a move higher, because as you can see here, it is forming this left shoulder head. Probably it will make move higher towards it's at looking at this range, it probably can move towards 180 before earnings, and then it will drop down. So let's see how it plays out. Weekly range will be 160 to 140, so keep an eye on that. And last one is DUAC, Digital World Acquisition, and this is the one. It's quite interesting because it's squeezing up lately, and it's squeezing higher and higher, supported by, I don't know what catalyst it has to make that kind of action, but the option activity indicates that its price range will be $100 to $80. But considering its volatility, I'm not interested in playing that. Once it reached to all-time high of, let's say it goes to $100 or $120, then I will be comfortable to open a put position for that. But I would not suggest you guys to do that, because DUAC options are very expensive. They are very volatile, and its price action is very, very volatile. It can make a move from the open around $10-15 once the market opens, and it can drop on a dime. So you just have to be very careful while playing with DUAC. If you I would still suggest not to play with this, because if it is a short squeeze, then, and if thing can go wrong, then it will be terrible. If you are playing with options, if you are playing with shares, then it might help you a little bit, but I'm kind of just keeping an eye on it. If it breach to this level, because it respects all this price level, and once it breach about $100, then probably I will take a trade. Otherwise, I'm not going to waste my money on DUAC, because let me show you something similar on GME. Now after that GME saga, just take a look at what's happening. We had one major short squeeze. After that we have the another one, The second one was quite similar to the second one, and after that we are just constantly declining. It's kind of like going back to its original price, that is around like 20 or probably somewhere around like a $50 to $40 level. And that's kind of like expected, because GameStop got like massive coverage because of this squeeze and all the thing happened in last January. But if you see their earnings, they miss more earnings. They miss their earning more often than not. So as a fundamentally, that company has nothing to offer for a long-term perspective. You can play it on a daily level, and that's about it. So similar thing can happen with DWAC, so just keep that in mind. We have this huge spike, and after that we kind of like making this cup formation. So it kind of, I can see like why they are targeting towards $80 to $100, because they want it to complete this cup formation, and after that it will drop down. Then it will be like a complete like textbook play. But that's what I'm seeing. Those are my predictions, and those are the price range that I'm watching for all the stocks. So considering that, I will keep an eye on all these stocks and open a trade if the price and the market conditions are right. That could be call, that could be put, or anything in between. But once I open a trade, I will post that trade in my Twitter. So if you are not following me on Twitter, please do, because I put charts and some technical analysis over there if I find it interesting. That being said, thank you for watching. That's it for this video, and see you again in next video. Bye.